What's up, y'all? Big Fish Capital, Big Fish FX, Big Fish Forex. I'm just here to give y'all a few insight on what I see for the upcoming week. Today is 11/29, 2020, so November 29th, 2020. Before we get into the week, so market is going to open today at around 6 p.m. or 5 p.m. for I'm on Eastern time. North American Eastern time. So market is about to open right now. It's 2:17 p.m. But before we get into the week, just want to get into the analysis of everything so you guys can understand what's really going on with a few pairs. So right now we have AUDJPY, so the Aussie and the yen. And always remember, whenever you start out, you go from top to bottom. So from highest time chart, so highest chart time frame, to lower chart time frame, right? So if we're looking at this overall, we see a nice little head and shoulders. So we see uptrend, consolidation, uptrend, a little consolidation, double top, down. It pulled down, broke the neckline, came down, tested the neckline, and shot back down and broke the previous low. So this is basically it's a downtrend at the moment, unless this can be broken. Overall, it's a downtrend. Even if it breaks here, it can still go down or whatever. But what we want to capitalize, because this is a monthly time frame, so it could take forever for it to even do what it's doing. As you can see, back here is what, 2010. April 2010, and right now we're on 2020, so it can take a long time for it to make these moves. So the month is about to close with a solid bullish bar. Let's go down to the weekly, so we can mark these. We can take that, mark something right here. We can mark something along the line of here. Like all of this right here. And so we have all this room right here to work with, but within that there's also other spots when we go down lower. So which is what we're going to do right now. So we're working with this spot, nice zone. So weekly time frame, I'm going to break it down even more. So now if you take a look, you'll notice you'll notice a trend line could be drawn here. It could be drawn like this. You can even do it like this. I probably would do it like this, just to be 100% sure. So now you have, it went up, tested the trend line, went down, came back up to test the trend line, went down, and it never broke the previous low here, and it's about to shoot above the trend line. So now, based on what we're seeing, because this is all price action, we're not playing any games, this is all price action, based on what you can see. So based on what we're seeing, we notice it's an inverted head and shoulders right here. If we may go upside down, we have right here a shoulder, a head, and a shoulder. So we notice an inverted head shoulder with the neckline being crossed at the moment. So we would consider this to be the neckline. If anything, I would put something like right here. I'll put something like right here, right? So now we have everything kind of broken down where we can see what's going on. We have nice trend line. We have the zones, monthly zone, weekly zone, and we have a pull going up. Now, if you notice, another thing that you can notice is, like I drew the fib. When I drew the fib, notice it hit the 50. It hit the 50, and it never got down to the negative 61. It went down to the negative 27, shot back up above 0 point. So that's an indication that it's the trend is basically changing for the time being. So we're above there. So our first zone to look at, if we're going to take this buy, if it cross here, is the 23, right? So that's going to be our first zone. Our second, and if you look at it, you can see everything matches perfectly with the fib and market structure. Look at the 38, look at the 50, the 60, the 78, all of it match perfectly. So we can do like this just for perspective, right? For the sake of perspective, you don't necessarily have to do this. I just do this sometimes, and I get the fib out of here. So for the sake of perspective, so what we're waiting on is for it to cross here. It needs to cross that. So we got some nice zones drawn, right? If we go down to the daily chart, this is what we see. Nice little consolidation. So it went up, pull back, and it's going to shoot back up. Now if we draw a line from the actual point it starts going up, we see this is a 38. If we draw the fib, a 38 rejection, and it's going up, right? So now if you take a look, see, this is why all the numbers matter. You notice that the 61% of the daily fib, the negative 61, is matching the zone up here, I believe, which was, this was 23, 38. I think this was the 50% zone. It's matching. So this is a very significant zone right here, which I could just take this off. Which, if you go back to the monthly, it's around this zone. So this is a very significant zone, which is also the neckline, and if it crosses, it's going to shoot up. So what we're going to be waiting on this upcoming week is for it to cross here, or even here. What you want is for it to go up in the daily, a nice daily bar to strike. Nice little daily bar to strike and close above this zone. Like, it needs to close above all of this. It needs to close, and then there needs to be a retest. The retest can be in the 4-hour chart. It doesn't matter. Like, the retest, it could be shot up, retest, and shoot back up, breaking the high that it created. You see what happened here? It went up, and it never retested. It just shot back down. This needs to go up, retest, and shoot up, and then we can aim for the $80 range, or the 80 even range. And then if it strikes beyond that, we can wait for another retest. So this is what we're doing, right? Waiting for a retest to this zone. Strike up. There may be another retest here. or it may just go up and retest and go back up. So if it rejects from here, we're going to wait for it to cross again so it can bounce off this as a retest and shoot back up. Understand, this is a lot of pips. If we do this right, you don't want to work a nice 150, almost 200 pips if done right. Now, another thing is we don't try to predict the charts, the market. That's not what we do. So there's a possibility that it may cross below here. So now if we clean up the chart a little bit, we know exactly what we're looking for. We can clean up the chart a little bit. We don't need that. So we kind of know what we're looking for, right? For the daily, we're looking for, because even this, if you fib this out, 38, 27, 61. 27 is the zone that we're trying to break. If it crosses over this 0% zone and it retests it and shoots up, our first take profit needs to be here. Then we'll wait to see what it does. We don't want to predict anything, because it can always shoot down here, break the previous low, and then break that previous low. Then we'll be projecting down here. So either way, we're going to be making some money, right? But for one, I think it's going to go up, because this is another trend line right here as another channel, which was just broken on the daily. And so I feel like it's going to go at least up to the -27 zone, as it needs to complete the actual trend line break to the previous point, and then we can see what it's going to do up here. And another thing is, if it does cross up here, it's going to aim for up here, because as you can see, overall this is a neckline, and once they cross the neckline, it's going to retest and it has to go up once it crosses the neckline. So if anything, this is going to start rallying all the way up. So pay attention. So AUDJPY, if you pay attention, it's going to start rallying all the way up, and that's my projection. Now if it goes the opposite direction, and another thing I noticed is, so we have another confluence, which is the moving averages, which I just use as confluence. As you can see, let's go to the weekly for a clearer view. As you can see, down, up, down. We could delete everything. Alright, so as you can see, down, below the moving averages, all three of them. Nice little sell. Then it broke the trend line, and it tested the previous high, and it kind of consolidated. So it went up just a little bit, and then it broke the trend line again, went down, and as you can see, it crossed the moving averages again and shot back down. And now what it's doing is breaking that trend line again, and it's trying to cross this moving average. If it crosses this moving average, we have a nice solid, as I was saying before, we have a nice solid projection to right here. So it's still decent, right? So now, oh man, there you go, the blue one. All right, I think my moving average is tripping, but so now what we're gonna do Like even if you go down to the daily, it already crossed on the daily. So now we have confluence 1, which is, we see this is a trend line crossover. Confluence 2, the fib. Confluence 3, another trend line crossover. Confluence 4, a higher chart time frame. A higher chart time frame fib. A higher chart time frame fib and rejection. Confluence 5, MA crosses. So we have like a lot of confluences here that we can go by. And this is the last close. So now it's above all of the MAs. And we're just kind of being patient with it. So that's my projection for AUDJPY, is for it to rally up. And remember, you don't necessarily have to follow this. This is just my projection. You yourself do whatever you feel is good for you. This is my projection, and so I'm kind of watching it because it can do one or two things. Go up and cross there, or it can cross that and start rallying down this way. Either way, we're in the money, right? Because even if it does that and it rallies down, previous zone, we have a nice 100 pips that we can get off that. So this is how you should be attacking the markets. Stop trying to predict it and just react to it, and it'll always serve you because you're going the trend direction. So higher time frame will show you exactly where it's going, and you just kind of follow that. So that's about it. Like, subscribe, comment, check out my Instagram, and if you need one-on-one training, click the link below in the description. Big fish.